Hi, everyone. This is Rob Roy of Elliott Wave Options, and welcome to this week's U.S. market update. As we do each and every week, we feature the stocks that you see on your screen now. And as a quick reminder, if there's a particular stock you're interested in, you can go directly to it using the chapters feature in this recording. All right, let's go ahead and take a look at the markets. A lot to talk about this week. As we can see, update today to finish off the week. We did have a couple of key economic reports that came out this week, starting with the jobless claims number that came in just slightly higher than expected. They were looking for the jobless claims around 215,000, 210,000. It came in at 215,000, so a little bit more than expected, and that probably gives the Fed a little bit of comfort. As you know, the labor market being so tight is one of the things the Fed's been watching from an inflation standpoint. So seeing that number tick up, I think, makes them feel fairly comfortable. We also had the key economic report of the week, the PCE, the Fed's favorite inflation indicator, and that came in basically in line. Back when we had the CPI and PPI report that came out last week and was a little hotter than expected, that started to create a few whispers of perhaps another even rate hike. But with the PCE coming in largely just spot on, both the headline and the core number came in line with expectations. One thing that was interesting, I thought, was the personal expenditures part was expected to be consumer spending up 0.2%. It was up a full percent. So the U.S. consumer is pretty resilient, still finding a way to spend money even when we're at record credit card debt. All right. So going back to the market, that did calm the market a bit. We moved to the upside yesterday, but we did have a doji on the chart, which we talked about in last night's insiders meeting. That's for our alert subscribers only at ewotrader.com. And then we followed through that move to the upside today. So the whispers of a rate hike are pretty much put to rest, at least for now. And now is it June? Is it later? 50, 75 basis points? That whole discussion is back. As far as rate cuts. Again, when we look at the chart of the S&P, it's just moving up nicely in this 45-degree angle. And if you haven't watched before, I really like the 45-degree angle, and that's because when a stock moves this way, the corrective moves, and we all know the market moves in impulses and corrections. That's the crux of Elliott Wave to start with, but the corrections are less severe when an uptrend is in a 45-degree angle. And as we add in the 10-day moving average, you can see we're just tooling right along the 10-day moving average. Now, this wave 5 projection has moved up a bit. As a reminder, these are just projections here. The wave 3 is the current wave. This means if the wave 4 were to start today, doesn't mean the wave 4 is starting. This is where it could expect to find support and then for a continued move higher. However, the algorithm and the software is programmed exactly to the algorithm as Ralph Nelson Elliott wrote it himself. There are other Elliott Wave software programs out there that have personal adaptations to the Elliott Wave, but this one is programmed exactly as he wrote it. So as the wave 3 continues higher, those projections on the 4 and 5 move. Now the wave 3 can go right up to that level. The algorithm likes that level, now seeing the S&P reach 540 at some point in time. And while I'm talking about the software, the brand new version, which is going to have live Elliott Wave is really cool. You can go to hub.com and register for free for a beta copy of the new software. I'll be using that once it's out of beta and moves to full-blown selling or production. So go and get a free copy right now. I think you're going to find that you like it. There's all kinds of really cool things, social aspect to it as well. So take advantage of that while you can. Looking at the TNX, here you can see that we have a little bit of a tick down in rates, which you would expect as those potential rate hike fears leave the market. We see a wave 5 potential down here. I just don't see the catalyst for rates to go quite that low. I think the Fed's just going to sit on their hands now. I'm not sure even the June rate cut is in play at this point in time. Inflation's coming down slowly. I think they're just going to be happy with status quo and see how things play out. Now, if we get some really poor economic data, that could change. That could step up the potential for rate cuts as long as inflation doesn't tick back up but I think we're just going to have a steady drip down in rates. I think maybe around 4% is where we could see the 10-year. Perhaps we even come down towards this wave 3 low around 3.9, but somewhere in that area is where I think rates find a bottom, maybe not all the way down there to the wave 5, which would mean some sort of a relabeling on this chart. But we'll see how that plays out. Looking at the dollar is staying pretty strong. We had a long discussion about the dollar in Tuesday night's Tradefinder. And by the way, if you haven't registered for Tradefinder, you can do it by the link you see on your screen now. We do it every Tuesday night at 9 p.m. Eastern Time. We talk the markets, we look for trade ideas, and we have a live Q&A. We have a great community there. Love to have you join us. So register for Tradefinder if you haven't, and we'll see you Tuesday night. But the discussion on the dollar was, as long as the dollar is staying strong like this, that means that other currencies are weaker, and the investment into the U.S. equities market is about 20% foreign, still 80% domestic, but that's a pretty good chunk coming in from areas around the globe. And with their currencies lower, remember a few years ago when there was a race to devalue your currency as fast as possible? Well, that's not working so well for the dollar. It's staying pretty strong here, right in this 105 area. We just seem to be pegged right around 104. And which way it goes from here, we'll just have to wait and see. I'm a little bit surprised that we didn't tick down a little bit in the dollar with perhaps some rate hike fears being gone and looking for rate cuts, but still being viewed as a strong currency. Money is still coming into the dollar. And as long as it stays like that, it will encourage foreign investment. So really good conversation there. So we talk about a lot of things on Tradefinder. Looking at the VIX. Now the VIX we had talked about with this trend line here of the higher lows, and I still think we're going to have more volatility in the second half of the year. However, we are breaking below that trend line, and as we do that, it seems that perhaps we're going to come down maybe to these lows around 12. That would be conducive of the S&P continuing to move to the upside there. If it just continues to drift up in this 45-degree angle, yeah, that's probably going to see a low, slow drop in volatility as evidenced by the VIX. Looking at the Dow, the DIA is moving up, maybe not quite as much as the SPY. It had its big run towards the end of the year. We talked about that in previous weeks, where clearly there was some rotation into the Dow. Probably fearing, as I thought as well, that we might see weaker economic data in the first quarter. We're about into March, and so far it hasn't been that bad. And so now we've got a move more in this 45-degree angle. So less severe on the angle there, conducive to moving higher. We are moving right along that 10-day moving average here on the DIA as well. And so it's not the sexiest place to be right now, but there's still movement in and still some money coming in, just not to the degree it was before the end of the year. The Qs is what I really wanted to see. I felt like we might make a new high today. We did. I wanted to see if that 5 would relabel to a 3, because as you know, the S&P and both the S&P and Dow are in wave 3s, but the Qs is not. The Qs is still in a wave 5. When we had this high back here on the 12th of February, we took that out over here on the 23rd. And the wave 5 that we had back there on the 12th moved over to the 23rd. And I wanted to see if we broke that high, would we relabel to a wave 3? We didn't, at least not yet. The 5 just moved over. So we're still in a wave 5 move to the upside on the Qs. That looks pretty constructive as well. You would think that a bid would stay under those stocks with some inflation scares dropping a little bit and perhaps rates dropping a little bit. That should give some fuel for the Qs to continue their move higher. Looking at the IWM, little move to the upside today, but more in line with what the Dow's doing rather than the S&P and the Qs. And we're right here at this point of resistance from the previous wave 3, right there at 205. And we've had this range, as you know, you've been watching. We had the range between 190 and 210 going back a ways. Then it dropped down to 170 to 190. Now we've held support there at 190. And the question becomes, I think, if we continue higher, because note we have a pretty nice ascending triangle here in the IWM. If that does break to the upside, and I talk about this all the time, any triangle can break any direction. It's not an ascending triangle breaks up and a descending down. Ascending, symmetrical, descending triangles can all break either direction. If it does break to the upside and runs up to test that 210 level, you can see that's not very far away. However, the mouth of this triangle is pretty large. And that's how you gauge about what the breakout will be on a triangle. You go from the high to the low in the mouth of the triangle. So that means that if it does break to the upside, then it's likely to break above 210. And that begs the question, does 210 then become support rather than resistance? If it breaks to the downside, then wow, we could see a move all the way back down into this range as low as 170 once again due to the size of the mouth of this triangle. But it's going to be really interesting in the coming days or weeks to see if we break above that 210 level and what happens from there. Taking a look at Bitcoin, that's one we don't have to go guess where it's going. It's going up. It went vertically up. We talked about that as we do each and every week on the Hub Financial channel. If you haven't registered, go over to Hub Financial on YouTube here and subscribe there. And you can join us each week for the live show. We talk a lot about cryptos if you're interested in that. And it's back in vogue again now with the fact that it's moving after so long of just kind of slightly creeping along. But it's going vertically now, consolidating around 62,000. If you've been watching the Hub Financial channel, we were talking about that. I thought we would get 60,000 before the halving. Now, well, where's it going to go from here? Well, we talked about that today, and there's some pretty high targets expected for Bitcoin, but it does need to kind of calm down just a bit here as it's gone so vertically. So it's consolidating around 62,000, even a little bit of a pullback from here. I don't think would be a negative at all. We've got some support there around 52,000. I'm not sure we make it down that far, not with the halving coming up on April 18th. We always show Coinbase along with Bitcoin, as you know, and you can see a nice move here. It's also consolidating along with Bitcoin right now after its big run. It looked like here we were just going to explode higher again. Then they had that slight power outage, etc. And then so we've just found our sideways move here for some consolidation. And I think you can stay long Bitcoin as long as we stay above 180, even 160 wouldn't be bad. Remember when I was talking about if Coinbase can hold 160, I think you go long. And boy, did it not only hold it, it took off from it. Nice little consolidation here. I don't think Coinbase is done going higher either. You can see the 10-day moving average is catching up. So that little bit of separation we had from the vertical part of the move being consolidated rather nicely. So other stocks of interest, as you know, you post a comment. As a reminder, each and every month this year, we're giving away one of our level 3 subscriptions from ewotrader.com. It counts the impulse strategy, which is now infused with AI for directional trades, the volatility strategy, which looks for breakouts from triangles, and our AI-infused time strategy, which looks for stocks that are going to stay in a trading range. It's worth thousands of dollars. All you have to do to qualify is leave a comment under the video, and you're registered. So good luck to you. Please leave a comment and get in the drawing. But taking a look here at the healthcare sector, when you leave your comments, these are stocks of interest that we go through. I read all your comments. Don't always get a chance to answer them all, but I do my best. So if you have a stock that you want, go ahead and post it there. Perhaps we'll feature it here on a future U.S. market update. But a lot of people have asked about the XLV. You can see the healthcare sector had a big run. It's a defensive sector. And I think if that PCE report had come in a lot hotter, you would have seen a big spike to the upside here. Now that maybe the fears of a rate hike and pushing out the rate cuts, all that stuff is gone. We get a little bit of a pullback here in the healthcare sector, again, because it's defensive minded. But we're holding 145. We held it today. So if we can continue to hold that, perhaps we regain a bid here in the XLV. But I also think there could be some rotation out of it. Maybe we drop a little bit lower, perhaps as low as 140 down here, as long as we stay calm on the whole inflation front and money moves back into the AI stocks, the tech sector, et cetera. But for today, we've held 145, and all we can do is go by the information that we have on a given day. We're going to close right here at the 10-day moving average, as you can see. But those are the two key support levels if you're interested in that. Tesla, you probably saw Elon tweeted out about the new Roadster. He talked about it years ago, and then nothing happened. And then he tweeted again this week that the Roadster's coming out. It's going to be the coolest car on the road, if you can call it a car, was his tweet. So I don't know what that means, but so far Tesla's been able to get back above 200 and hold there, and that's key. 200 is the key level to watch here on Tesla. We broke below it, we tested it, we consolidated underneath it, and then we've broken above it, and now we're consolidating on top of it. And the longer we can hold above the 200 level, the better chance we have of getting some sort of a bid back into Tesla. It's been kind of the forgotten stock here over the last couple of months, but staying above 200 is what you want to watch. So if you wanted a speculative trade, you could try to take a shot at Tesla, but if it breaks below 200 with a follow-through day, then you're out. So it's a pretty easy one from a risk to reward standpoint. Google, which has not been participating in the market rally, it had this big symmetrical triangle. And as I said, triangles can break either direction. Obviously, their misstep with their AI launch has hurt them. And moving down today, not participating in the rally. Where could Google find its footing? It's got a little bit of support here at 135. It seems like that's where Google wants to go. If it can't hold that, then it's got even more support down here at 130. I don't know if we make it down quite that far if the rest of the market continues to move higher, but I think we see 135 on Google, and then we go from there, see where that plays out. Oil, catching a bid. And gosh, if you visited ewotrader.com, you can see the cars that I drive. I'm a motorhead, old school V8s, and so the gas pump is not my friend at this point, especially not with oil breaking above that key level, at least the USO, that key level there at 75. And look at the size of this ascending triangle in the USO. So we'll be watching closely Monday to see if we get a follow-through day on oil. If we do, we could be off to the races on oil, another big mouth of a triangle. So pretty big move forecast here in oil, much to my chagrin. But it has to have the follow through because we can get head fakes and get false breakouts. But at least today, breaking to the upside out of that ascending triangle. Also wanted to take a look at AMD. Obviously a big stock to talk about this week, especially today with this gap up. We consolidated here around 180 for a while. We talked about this during Tradefinder as well on Tuesday night, that if we could break above 180, it could be off to the races, and that's exactly what happened. And it gapped up today. You know, I don't like gaps. We put the 10-day moving average on. Now we've got some separation from where we are in the 10-day moving average, so maybe we need a little consolidation here on AMD. We're right here in this wave 5, so that perhaps moves, but maybe some backing and filling would be warranted in AMD, but a really nice Friday for AMD. And we always end with a foreign market, and we usually look at the INDA. It's kind of taking a little bit of a breather right now, so I thought I would show you the EWG. We talk about all the foreign markets during Tradefinder as well. And you can see this big, huge move to the upside here. I don't know what's going on in Germany, but they certainly caught a bid. They had a bit of an ascending triangle pattern right here, and that was a nice upside breakout on the EWG. It's right at the fib level. I mean, all these Elliott Wave patterns here have just been spot on, right at the 61.8% fib level, which in my opinion is the strongest of all fib levels. So maybe it goes sideways for a bit here, allows that 10-day moving average to catch up just a little bit more. It's catching up pretty quickly, but certainly some rotation of money globally moving into the market in Germany. Hope you have a great weekend and look forward to talking again soon. Take care, everybody. If you like these recordings, I'd like to invite you to join our new Tradefinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.